Hi everyone, Larry Bailey here with Mortgage Workflow Partners, bringing you another weekly market update. This one happens to be for the week of November 11th, 2024 in review. Today is November 18th, gang. It is almost the end of 2024. One of the things that I've been focusing with our clients is training, training, training. I know for your sales teams, continuing education hopefully has already been done. If not, you need to get on it right away. For your admin teams and all of your Encompass users, please, please, please check out mastery.encompass.com. We've got cohorts starting in January where your admins and your admin support teams can learn everything they're supposed to know so that they can best support your company going into 2025, especially with all the new updates that are coming to Encompass next month, December, with version 24.3. We're here to help. So let's get into what's going on in the market from last week. The big headline, of course, is annual inflation ticks higher. We'll go through some of these stories. The first one is consumer inflation moves higher. Next one is wholesale inflation hotter than expected. Next one is October retail sales beats estimates. Next is trends in unemployment claims persist. We've got a family hack in the week, and we've got what to look for in the week of where we are now, November 18th. So the first one, of course, is consumer inflation moves higher. We can see that the graph here comes in where we've got the headline year over year. We saw a decently high reading coming into March. And then we see this trend line going down, 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 and there's a little bump. And so the latest consumer price index showed that the inflation rose 0.2% in October, with the annual reading coming in at 2.6%. While this was an uptick from the 2.4% 12-month rate seen in September, it was in line with what economists had forecasted. The core measure, which strips out volatile food and energy prices, that increased 0.3% from September, while the annual reading held steady at 3.3%. Those figures were also within expectations. So what's the bottom line here, gang, is that the Fed began aggressively hiking their benchmark Fed funds rate, which is the overnight rate of borrowing between the banks and the Federal Reserve, literally just for the night, in March 2022 to try to slow the economy and curb the runaway inflation that we were all experiencing during the pandemic. More recently, cooling consumer inflation and rising unemployment caused the Fed to start cutting Fed funds rate. The first one was by 50 basis points after a meeting in September, and then a 25 basis point cut following November 7th. And while we've seen significant progress in inflation since it peaked in 2022, with the headline CPI at 9.1% at that time and the core CPI that hit 6.6% at the time, we are seeing an acceleration in the rate of change. For example, if we annualize the last 6 months of readings, the year over year inflation for core CPI would be 2.5%. And while the annualized for the last 3 months gives us a rate of 3.5%. In his speech last week, Fed Chair Jerome Powell noted that, quote, the economy is not sending any signals that we needed to be in a hurry to lower interest rates, close quote. He added that the Fed will, open quote, carefully assess the incoming data, the evolving outlook, and the balance of risks, close quote. This is as members consider the further timing for further rate cuts. With the Fed's next meeting on December 18th, key inflation reports will look to include the next personal consumption expenditures report that's coming out November 27th, and the consumer price index that's on December 11th. On the labor front, November's job reports, which is December 6th, of course, will also play a pivotal role. Wholesale inflation hotter than expected is the next story. Now, we talked about CPI. Now, this is all about the producer price index or the wholesale level. That's the PPI. This measures the inflation at the wholesale level, and that rose 0.2% in October, with the annual reading jumping upwardly from a revised 1.9% to 2.4%. This was hotter than the 2.3% that the market was anticipating. The core PPI, that strips out, again, the volatile food and energy prices, just like the core CPI does. That rose 0.3% for the month, and the year over year reading moved higher to 3.1%. Bottom line in this one is while the stalling progress on inflation has caused some fears that the inflation is reemerging, we need to look at the numbers in context, of course. Context is everything. And so October's 2.4% year over year PPI reading is well below the peak of 11.7% seen in 2022. Still, the PPI data is important because some of the components are factored into another inflation measure called the Personal Consumption Expenditure, that's the PCE. We will need to see if that hotter than expected PPI, if that causes some upside surprise to the PCE when it's reported later this month. October retail sales beats estimates. I got news for you. I think people are going to be spending money like anything this season. We'll see what happens. Retail sales, here's a story. Retail sales rose 0.4% in October, above the 0.3% gain that the market was expecting. The core reading, which gets plugged into the GDP, was weaker than estimates. And though this miss was offset by a big revision higher to September's readings. Bottom line in this story of retail sales is that overall, the sales figure for October shows consumer spending remains resilient ahead of the all important holiday shopping season. I'm telling you, it's probably going to be a big one. Plus, it's likely that the hurricanes Helene and Milton kept sales figures from being stronger last month. We'll see what happens. Here's the next story. Trends in unemployment claims persist. The number of people filing for unemployment benefits for the very first time fell by 4,000 in the latest week, as 217,000 people filed their initial jobless claims. Continuing claims that also dropped by 11,000, with 1.873 million people still receiving benefits after filing their initial claim. Bottom line in this story is the low level of initial jobless claims suggests that employers are continuing to hold on to their workers. Yet continuing claims are still trending at some of the hottest levels that we've seen in recent years, now topping 1.8 million for 23 consecutive weeks. Employers have clearly slowed down their pace of hiring as challenges remain for job seekers searching for their next position. Family hack of the week. Did you know that National Gingerbread Cookie Day is November 21st? Well, if you did, kudos to you. If you didn't, check out the family hack of the week recipe that you'll see on screen. And if you're listening to this podcast, thanks very much. You can always check us out using Mastering Encompass over on YouTube, or head over to mortgage.community, or soon you can head over to masterengencompass.com to check out our content there as well. Here's what we're looking for this week, gang. We are going to see an important housing report. This is starting today, Monday, with the home builder confidence for the month. October's housing starts and building permits follow Tuesday, while Thursday brings existing home sales and latest jobless claims. That's what's happening this week. Thanks very much for always listening. My name's Larry Bailey, here with Mortgage Workflow Partners, bringing you everything that we can to make sure that you know what's going on. We'll see you next time. Bye-bye now.